everyone and welcome to Decode with Kalyani Nangi. So today in this video, we will try to understand what is mutual fund and how to pick up right mutual fund for yourself as a beginner. So this video has been divided into three parts. The first part will address why we need mutual fund. The second part will address that how mutual fund works. And the third part, which is very important and crucial for everyone, that how to pick up right schemes and right mutual fund for yourself so that you pick up a right mutual fund and you can get good returns. So make sure you watch the video till the end. So even before going to the answer that how mutual fund works and like tips and tricks to pick up mutual fund as a beginner, we first of all need to understand that why we need mutual fund. So my first reason to choose a mutual fund is that we all know that our traditional form of getting returns from money is a FD. So we try to get as much return as possible in FD. Okay. But the FD returns are not sufficient that it can beat inflation. So their mutual fund is answer to this question. The second reason which I'm likely to give you is that, for example, currently you are earning 60,000 rupees per month, and after meeting all the kind of expenses, you are only left with 10,000 rupees. And now you want to invest this 10,000 rupees in different asset classes. Is it possible that only with 10,000 rupees you will get this good amount of exposure? So at that time, mutual fund is again answer to this question. The third reason which I would likely to assert is that even when you want to invest in different asset classes, for example, equity is a very popular form of investment these days. But for that, you need certain amount of expertise. You need a lot of dedication of time. And if you're a professional, like you're an IT professional, you're a doctor, where you will get this time for? So at that time also, the answer to this question is mutual fund. So in this next part of video, we will try to understand that how mutual fund works. So stay tuned.
So mutual fund. Let's divide it into two words. Mutual means sharing and fund means money. So sharing a pool of money. Hence, basically what is happening is there is a professional or expert called fund manager that collects money from several investors like you and me, and by this pool of money, a fund manager can invest in several money market instruments such as equity, bond, gold, real estate, etc. And afterwards, when the income or gain is realized, which is actually generated because of these investments, so this gain are distributed proportionally among investors after they deduct their fees and expenses, etc. So for example, if you want to understand in a very simplified manner, at a pizzeria there is a popular pizza which is costing you around 600 rupees. So all of your friends decided to pool money and decided to have slices of pizza rather than affording a whole pizza. So actually I've seen a lot of people choose mutual funds on the basis of expense ratio and recent past. Expense ratio is the fees you are actually giving to asset management company. You can understand by this. But that should not be the criteria of choosing your mutual funds. So basically you can use a lot of platforms for doing your little research about the mutual funds you are picking. So I'm using Value Research and I have picked HDFC Flexi Fund. So here it's showing an overview. So overview in riskometer, it's showing very high. So there is a high risk. And also you can see an overview, the returns. So always try that you look for returns in longer term. Okay. For example, your spectrum should be not less than 3 years. 3 years, 5 years, 7 years, 10 years. Now I am looking at the returns section. So here you can see there is a graph. So graph is the comparison of HDFC Flexi Cap Fund with its benchmark. Here benchmark is S&P BSE 500. So it's very important that we compare its performance against the benchmark. Okay, it's always very important. So here you can see the green line is the benchmark. Okay, and now if we want to look at the returns, okay, so when you go below this section, so here you can see the returns is clearly mentioned and also the benchmarks performance. So here, for example, if I check at the 5-year column, so you are able to check that this HDFC Flexi Cap Fund is performing above its benchmark. Its return is above its benchmark. because we should have at least this kind of expectations that its performance should be again above the benchmark. Now I've also checked the 7 years. Here the best and worst period you can also check, and there is a calculation of SIP which I will tell you about in next upcoming video. Now in overview section, if you see, so risk, it was written that it's risky. Now portfolio breakdown for me is very important. The asset allocation, where the company is allocating its assets. So we can see 91.87% equity, 2.75 real estate, and rest in cash, and also the sector wise holding. So this company is basically investing a lot of money in financial sector, so you can predict the returns according to it, right? You will have a brief idea that where the company is investing the money. So the financial turns around to be 31.94%. And if you see the top holdings, there is also a section of top holdings. So ICICI Bank, State Bank of India, a lot of things are mentioned. So you can always understand that how your mutual fund gonna work. So it's very important that we also look for portfolio. And now peer comparison is also very important. Always believe that you should have a brief overview of its peers also. So you check for the longer returns, and also check the expense ratio, how they are performing. Now if we go to the other section, so in other section you will see the fund information. So here asset management company is HDFC Asset Management Company, and the information of fund manager is also given very properly, that she has joined since 29 July 2022. And also the other funds which she is managing, HDFC Focus 30 Fund and HDFC Tax Saver Fund, also look for its performance, how they are performing. But again, the kind of past record which we have observed, it means that she was not the fund manager at that time. So basically now she's a newcomer to HDFC. Now we can have a brief idea about the fund manager and the fund house, which is very, very important. Okay, so another factor you should always look for is rolling return. So what is rolling return? Basically you are looking for return in a continuous form. For example, if you are looking for a 3-year rolling return in a period span of 10 years, for example, let's take the return from 2001 to 2010. So a 3-year rolling return will look like, I will look for from 2001 to 2003 return, then 2002 to 2004 return, and then 2003 to 2005 return. So we are checking at continuous interval, how is the return, how the fund is performing. And I think it's a very important aspect while you're looking for. We have now reached to the final part of the video. So this part of the video is being recorded in my phone, and earlier part was in camera. I know sometimes my eye focus is not proper, and sometimes a lot of disturbance usually happen. Since I am a beginner, so I feel it difficult to do it all by myself, plus I don't have proper setup. But in the upcoming time, if you keep motivating me, I will make sure that I will make videos at a greater efficiency and at a greater details. Now let's revise our concept. So first of all, we looked at why mutual fund, how mutual fund works, and after that we also looked for what are the criteria we should always look for while choosing mutual fund. But before that also we should understand that what is our mutual fund investment period, what is our plan, are we looking for aggressive return or we are looking for a plan for our retirement or children's education. So it should be allocated according to that. For example, if we are looking for a long term, maybe exposure to equities would be better. But if our plan is a mid and short period, maybe exposure to debt will help. So it will change accordingly according to your plan, like what is your vision of your mutual fund. Now let's revise what we have looked for. So I was doing a little research, and we can all do by ourselves. We sometimes need expertise, but maybe our little knowledge will help us to understand like where we are investing, are we doing it in a right way. So what we looked is that we look for longer period of returns. We also look for rolling returns. I said rolling return is very important. Apart from that, what else other factor we look for? We look for the benchmark performance, how the mutual fund is performing against its benchmark. So we should always make sure that it performs better than the benchmark. And apart from that, we also look for the allocation. like where the our mutual fund is allocating up the assets. So it's very important. Also, the another factor which we look for is peer comparison and the expense ratio in the video which we discussed. And apart from that, we also look for asset management company and the fund managers, because their performance and their principles are very important. Like we can actually predict that how our returns will be on the basis of the long time analysis of a fund manager of or a like AMC, because everyone has their own principles. So I'm sure that after watching this video you will have some kind of clarity. So I have put a lot of effort in making this video and making the videos because I do it by myself, and your appreciation always help me. So if you have seriously liked this video, please don't forget to like, share and subscribe to my YouTube channel. And don't forget to press the bell icon, because in the next upcoming video I will be talking about SIP and lump sum investment, so maybe it will be very useful to you. So stay fit and bye bye.